The financial sector is the mirror of a strengthening economy. The growth of the banking sector year to date has 73.6%. That's a marginal increase from the 72.1% from the preceding year. Regulatory bodies as the Central Bank of Nigeria and Securities and Exchange Commission have done greatly controlling the sector and boosting investors' confidence. Now, the all-share index, which stands here now, all-share index grew by 37.66% year to date. And that's the biggest reflector of the growth, which is the financial sector. The key sectors are that the sector has some key features that distinguishes it from other sectors in competent corporate governance and strict regulations. The growth they experience has been through the recession and still growing after the exit. Well, experts attribute the growth during the recession to its operations not being affected by inflation, since the type of inflation we had was cost-push inflation. Well, it is a highly regulated industry. That's talking about the banking industry, that with the SEC and CBN industry has been highly professional, although there has been some issues in the past. The Central Bank of Nigeria, with its regulations, has increased the investors' confidence. Now, if you have invested 10,000 naira in the top 5 performers that's of the sector, that's the GT Bank, Zenith Bank, Eco Bank, Transnational Incorporated, United Bank for Africa, and Access Bank at the start of the year, that's January, an investor would have had about 18,000 naira returns. That's over 70% return on investment from the market that opened January 3rd till date. Well, interestingly, well, I have the Chief Executive Officer of Infoware, Uwa Agbonile, who joins me now in the studio to talk more on this issue. Thank you very much for joining us on Business Tonight.
Thank you for having me.
Well, interesting figures there from the banking sector, what we've seen. I want to know in strict terms, what is responsible for this, let's say, this growth that we see in the financial services sector?
Well, like I always say, I'm more of an analytics kind of person rather than fundamentals. But I think part of it is what I'll call a dead cat bounce. Dead cat bounce, meaning if you look at the situation last year, the market was really, really in a bad shape. I think year to year for last year, the overall banking sector returned about 2.something% overall returns. So they were in pretty bad shape. But this year, because of monetary policy, the exchange rate stability, and a whole bunch of other things that happened, including the economy getting out of recession, the health of the banking sector now looked like it wasn't as bad as people thought it would be. Another case in point was Eurobonds, for example. The Eurobond debt that people had, that a lot of these banks had, was considered potentially a real cause for concern, but that has died down. So after that, and based on I think the FX stability, if you look at it, it was around from April. That's when it basically took off. So year to date, they are now returned about over 70% average on just the NSE index alone.
Now, indeed, the Central Bank of Nigeria, lots of knocks with regards to the Forex issue. We knew the negative effect that even had, even with regards to investors' confidence and all of that. Would you say that confidence is back? Is the CBN actually on the right track?
Well, I would say the market has spoken, and the answer seems to be yes. So foreign reserves are better, it's healthier. There's a lot of interest of foreign portfolio inflow into Nigeria. Actually, it's been happening quite streaming-wise. Then there's some other interesting things that data from our terminal that we've looked at. One of them is the fact that one of the things that's greatly helping the market is that foreign portfolio inflow into the market has actually been quite high. So it's been higher than the foreign institutional inflows over time. And I think if we don't have the graph here, but if we look at the graph, the foreign institutional and local institutional inflow, they're just about getting to be equal now. So it's actually been a relatively healthy market in that regard. What I mean is that the previous times when the market really went down, it was dominated by the foreign inflows. So when they left, everything just went south. But I think we have a much healthier condition this time around, simply because for local portfolio inflows from PFAs and other institutions is actually quite high. So I believe that the next time a shock happens in the market, it's going to be a lot easier and better overall for the overall market.
Many analysts have also argued that the fiscal and the monetary side, there's been some issues. There's not been a synergy between both sides. The fiscal policies are always different from the monetary side and all of that. Do you see them complementing each other at this time?
Well, to be honest with you, I'm not an expert in that area, so I'm not going to make too much of an assertion in that space. But again, I'll say that if we look at just overall what is happening in the market right now, the ASI itself has done exceedingly well year to date, right? Returning over 37%. If we look at different sectors, actually the ASI would have done way better if not for the oil sector. The oil sector index actually has returned a negative return so far year to date simply because of the number of those equities in there like Owando. Yeah. So overall, all the signals imply things are heading in the right direction. You know, there's a lot more stability from an FX or foreign currency management standpoint, so that's good. Monetary policy has been going somewhat steadily. The key thing with these things is usually you don't want surprises and you don't want erratic decisions to be made. So over the last several months, that seems to have been going pretty well. So, and we're seeing some of the effects. In
all of this, we can't rule out crude oil production and
absolutely
revenues coming from crude oil. There's been a little bit of stability, Niger Delta, no more bombs and all of that after the intervention of the acting president, then now vice president. What's your take with regards to crude production? We still can't ignore funds coming from there.
We can't. That is still where the majority of our FX comes from. So the good news for us, for Nigeria right now, is that our FX reserve has actually gone up. Yeah. So there has been stability in production of crude, which is also creating stability within the market itself, within the FX market, meaning CBN has been able to actually meet its obligations, which has created stability, right? Then another interesting thing is that there's actually been a very huge amount of FX inflows from remittances from Nigerians abroad. People have not, I'm not sure people have accounted for that, but it's actually quite reasonably large. And I remember Nigeria is estimated to will have like the 5th or the 6th largest inflow of FX remittances incoming. So that's going to play out towards the rest of the year in terms of actually creating more of that stability in the FX market, I think.
Indeed. Now, let's look at this chart again now. That's talking about the Securities and Exchange Commission discovering that Owando PLC was involved in breach of some protocols and all of that, you know, breaching provisions of Investment and Security Act of 2007 and the SEC Code of Corporate Governance for Public Companies. Suspected insider dealings and all of that was actually witnessed when it comes to the Owando issue. The Owando issues bring us back to the oil and gas sector. Issues around Owando before the AGM and all of that has actually affected the price of the stocks at the moment. What do you make of this? The sector still remains very important.
It's very important. It's a kind of a good news, bad news. I think the Owando effect is casting a cloud over the sector. But there are some good news. Recently, there was news that came out that actual production by the locals, by the local oil companies, have actually increased by 200%. So that's a signal that things are probably may not be that bad. So Owando seems, hopefully, to be an exceptional case. And if it's an exceptional case, interestingly enough, who knows? If somebody looking at the oil sector right now, maybe this might be a good time to buy, you know? So.
But what would you say about the actions taken by the Securities and Exchange Commission? You see that a step in the right direction?
Oh, absolutely. I think so. I think so. The reason is that you want to create a situation in which you create clearly, send a signal to the overall market that these are the rules and the rules are enforced. And if you do that, it creates a sense of stability and a sense of confidence. That's the word, confidence in the market. If everybody believes that any rule applies, then it scares people away. So, and I think so, those actions I think are good, especially for a company as big as Owando, for the acts to actually come down on them when they violate the rules. It sends a very good signal to the market overall. Very
good signal, because the oil and gas sector has actually been challenged. We remember the NIPCO taking over ExxonMobil and changing the name to OneOne. That also affected the stocks of Mobil drastically. So, and with the price of crude being a little bit on the high side now, 55, 57, and the stocks having this, is it not sending wrong signals in any way?
Well, there is what you might call the local dynamics, and then there are the international dynamics, right? So the international dynamics, actually, I think if you look at it, I know if you, I call myself a glass half full. I actually see more of a positive aura around the overall, because local production is increasing, so that's a good thing. Oil prices are reasonably in a good area, which is in the mid-50s, which is a good thing. So if that continues, I actually think it's going to be better overall for that sector. So recovery seems to be in the books.
All right, as we round up now, lots of efforts by this government to stabilize this economy, which is what we need, because the stability will definitely impact on the capital market and the entire economy.
Absolutely.
If money comes in, FDIs and all of that. Executive orders of doing business, addressing these forex policies and the budget things. These policies by government, you also talked about the Eurobond, notably, and also the Sukuk bond, even for infrastructure and all of that. Are we right to say that we're actually getting out of recession? We're out of recession, but are we really getting that stability? Because it's a marginal, increase. Are we really getting that stability that we want with all of these policies in entirety?
I'm not a policy wonk. I'm not an economist.
Yeah, so I know you do more figures.
I play more with figures. So the way that I'll put it is that, so we've come out of a rather bad period in time in which, even before the recession, it was really flat and not going anywhere, right? So and that lasted for almost like 2 years, in which we're just kind of neither here nor there. Then we did go into a real recession. So early this year, we've kind of come out of that recession. So what I think we want to look for is actual steady growth that goes above the kind of very menial growth that we have. In an economy like ours, where if we want to create enough jobs just to absorb the graduates that are coming in, we're going to need, from my last estimation, anywhere from a minimum of 5 to 7% growth on a per annum basis. So we are nowhere close to that yet. So yes, the stock market seems to be doing well, but the guy on the street doesn't, at least right now, people are not feeling it per se. It's like saying there's Wall Street and there's Main Street. So our Wall Street might be somewhat getting out of it, but Main Street not feeling it yet. So we still need efforts, policies and regulations and all kinds of things that pull Main Street up. And overall, of course, it will affect the stock market simply because it's a measure of economic activity that needs to increase.
Chief Executive Officer, Uwa Agbonile, let's leave it at that. Thank you very much for actually bringing insight into all of these issues around the market, the financial services sector, and all of that. Thank you for joining us on the show.
Thank you very much for having me.